Hey everybody, it's Pete. Welcome to Stock Trading Pro. Today's Stock Market Live is going to cover sector rotation. We're going to talk about news that you can trade. We're actually going to review some stuff from a coaching call that we had last night. Every Monday and Thursday we have coaching calls. But I want to talk about something that is coming out today, which is the Fed minutes. The Fed minutes can be as impactful as the announcement itself. So if you are trading today, 2 o'clock this afternoon, when those announced, you really, really want to be on top of your game. It's not a time to be having coffee. And especially if you're in a trade, you want to make sure you have your stops in there. There's one really, really big thing that I want to talk about today that I want to share from last night's coaching call, which is about hesitating and committing to a trade and how the question was actually wrong and how I twisted it into what you should be focusing on because you think that you're committing to the trade when that's not really what you're committing to. And it's really a big thing. You're like, I like that idea. How much should I get in there and put that on? How should I get in there and not hesitate? You're focusing on the wrong thing. And if you ever have had that problem where you see the trade and you don't put it on, it can be fixed like that. But this is what we're going to talk about today. So we have a lot of stuff we're going to talk about today. We got oil prices. We have sector rotation. We're going to talk about tech stocks, energy stocks, healthcare stocks, and one other group that caught a little bit of a bid as well, something that we haven't traded in a while. We're going to really run the gamut today. We're also going to talk about treasury yields. Everything we're going to talk about today is heading into the rest of the week. But here's one big thing I want to talk about from yesterday for day trading. If you are a day trader right now, which I know a lot of members of our community are, yesterday was a day to make money. There's a lot of times over the last, let's say 2022, where the market's been a little bit challenging. My gosh, there was money to be made yesterday. Yesterday was a day where you should have mixed it up. There was a lot to do. You just needed to make sure that your software was set up properly to give you those ideas. So we have a ton of stuff to talk about today, a lot of actionable stuff on which stock picks are the best stocks to buy now, which ones are in my game plan today. We have a few tech stocks that are right on that bubble of a breakout. In a bear market, we tend to get these little bit of a blip through that level and you get involved and then they pull back in. So we got to be aware of that the market conditions have to dictate when you buy a breakout. So in other words, do you buy it as soon as it blips through that level or do you wait for it to get through that level? We got a whole bunch of windows open right now. I'm pretty excited for today's call. Hopefully everybody had a nice Independence Day, a nice 3-day weekend here in the States. So stick around. We'll be back in just 1 second. Okay, so thank you so much for joining me here today, everybody. I really, really appreciate it. We're going to jump right into it. We're going to actually get right into sector rotation. So obviously everything we talk about here is for educational purposes. It's up to you to make that final decision, up to me to help you make better decisions. That's really my mission for these live streams. If I do that for you, if I have earned your trust today, please do me a favor. By the end of the video, make sure you hit that subscribe button, give me a thumbs up, and more importantly, because I want to help you, leave a comment below the video to let me know that if there's anything that you'd like for me to follow up on a future video or a question that you have about anything we talked about today, I promise I'll get back to you as soon as I can. So what we want to start out with, the sector rotation, and we're going to jump in right over here. So you can see last Friday, we actually had a pretty good day in the market. Now, what's interesting is it looks like last Friday was actually a better day to trade than yesterday. But man, it really was not. Futures are down a little bit right now. If we go to the SPY and we take a look at what the market did on an hourly basis yesterday, look at these hourly charts, and especially yesterday after the market kind of settled in, which this kind of brings us into one of the most important parts of trading. And it really doesn't matter whether you're day trading or swing trading, setting up your software to give you the best ideas before the market opens reduces 90% of the stress from trading because you're now not looking for ideas after the market opens. You're not trying to find stuff. Your software and your game plan is already there to spit out those ideas. I just want to give you one trade from yesterday, stock that we actually had going into our game plan yesterday as a bearish setup. So in other words, it had long-term bearish order flow, and we went into the day looking to be a short seller of the stock. Reading the market and the market internals. So we're talking about the market, the sectors, and then industry groups, and then the market internals that we look at, such as the breadth, the trend, the tick, the VIX, all of those kind of things. Putting that package together, that's tape reading. So coming into the day, we had order flow that was bearish on this particular stock. And after the market opened, the market, what we call, caught a bid. So now we have to make a decision. Do I want to still look for spots to short sell this stock when everything in the market is kind of catching a really strong bid, where the market internals and the sector rotation was all clearly saying that the market was a buy after the first 90 minutes of the day yesterday, which we'll get into that in a second. There were some stocks that just exploded. So the point that I want to get across, raise your hand if you go into the day saying, I want to be in this stock, and this stock, and then all of a sudden it explodes in a completely different direction. If you want to raise your game a little bit, you have to answer the question. And again, in your trading plan, this is a part of how you determine to trade. Do you still trade stocks that do not match the game plan that you had going into the day? So if we go back over to sector rotation and we take a look at what it looked like going into the day, which was here. This is going into Wednesday. This is going into yesterday. Pretty strong, right? So the stock I'm talking about here is COIN. So if we take a look at the daily chart of COIN from yesterday, clearly the stock was bearish at best, right? At best, you could say the stock maybe was neutral. So maybe we could say we're sitting in this box here and there's not much to do. Obviously, we're trading this along with Bitcoin as well. But we're looking, Bitcoin broke below 20,000. Coin has been very weak, has not rallied with the market. It was resting right on the bubble of a breakdown. But after the market opened, and again, if you happen to be new to the channel, there's two major components that make trading infinitely easier, which is order flow. Can you answer the question, is it obvious? Is it obvious that buyers or sellers are in charge? And then you answer the question, how do I know when it changes? That second part, which is the tape reading part, where you're adding the market. You're adding the market internals. You're adding sector rotation, which we're going to get into all those ideas in a second. Those are the components of trading. Is that hard? No. Let's just answer the questions. Is it obvious, and how do I know if it changed? Those two things have to be on the table for you. So you need a system. You need a process. Obviously, our process is the New York method, right? So if you came into the day yesterday wanting to be a short seller and it changed, you have to know what you plan to do. So generally speaking, if we trade against the obvious long-term bias, because right now it is very obvious, that means that we shift into momentum mode where we are just looking for the next move. We're looking for the next push. But yesterday we got a gigantic gift where the last 4.5 hours of the day, from a day trading perspective, and tech stocks leading the way, bullish across the board. Yesterday was a day to be a tape reader. Yesterday, the market offered amazing opportunities. Now, I want to give you a little bit of a coaching tip of something that we talked about last night. Very, very important to know what you're looking for. Otherwise, everything's going to look the same. I know that sounds kind of simple, but it's absolutely the truth. Here's really the point. If you missed yesterday's rally and did not make as much as you should have as a day trader, it simply means that you aren't reading the tape properly. It means that you are not being flexible in what can happen. That's what happened yesterday. So if we take a look at COIN based on what unfolded, which was this day yesterday, it doesn't look like anything monstrous, right? But this is the afternoon. When we start to stack what happened here in the market and in this stock, just unbelievable. I just want to put it up there so you can take a screenshot of just amazing price action. Basically from the afternoon, we're talking about 48 all the way up to 55 and change. So for those of you that are on the day trading side of things, saying there's not a lot of activity, it's been boring, it's been hard to read the price action, I want to add two things to that. Number one, that's a $7 move yesterday, just from 11:30 to the close. $7 in a $50 stock. That is a monster move in just 4 hours. The second part of that, which is really important, is you need to have active stocks in your watch list prior to the day starting. So I give you a lot of the list that we look at. AMD is a part of my list every day. SQ is a part of my list every day. COIN is a part of my list every day. So again, I'm not giving you secrets. I'm just telling you that you need to be prepped to have those in your list. Some days they're amazing. Some days there's nothing to do. You need a rotation that each day as the market unfolds, maybe two of the five are in play, but sometimes they rotate. It's a different two every other day. But you need to have those stocks in your watch list every day because sometimes they're in play, sometimes they're not. It's the preparation that pays you. So speaking of prep, let's get into today's game plan, and we're going to walk through some of the rotation. I'm not going to say rotation into tech stocks, just a relief rally that we had in tech stocks. A lot of conversations about the yield curve, but I want to talk about probably the most important thing today, which is the Fed minutes and oil prices. Those are the two biggest things. Oil got absolutely shellacked yesterday, took a monstrous hit, and then they caught a little bit of a bid. So the big thing you got to keep an eye on now, that big move to the downside, which I believe was about 8.5% at one point yesterday in crude oil. Let me actually just bring this up here to give you a little bit of a idea of what it looked like yesterday. This was the move yesterday that we were watching, just an absolute shellacking, which actually happened right around $100. Very, very big, right? Very, very important. So how does that translate into what we'd be looking at on the energy side of things? Well, if you remember last Friday, I have to sneeze. I'm trying to hold it in. Sorry. I apologize. Last Friday, we talked that the bearish picture of energy stocks was still in place. We had a short-term rally, but we were looking only for them on the bearish side. So again, we're talking about the difference now between long-term order flow doing exactly what you expect on a short-term basis versus long-term order flow and the tape changing. So remember, I want you to really write this down because it's super, super important. Order flow is answering the question, is it obvious, and how long has it been obvious? How much money was spent to make that chart, which means how much time did somebody spend a lot of money? The second part of the equation is how do you know if it changed or if it's still valid? My gosh, please write that down. It is so important. Is it obvious, and how do I know if it's still valid? When you answer those two questions, you eliminate 90% of the stress from trading. The last part is then obviously understanding how to manage those positions if it's still obvious and if it's still valid, or if it's obvious but it's changed. That last part, the trade management, that's where all the money's made, which actually I want to walk you through something that we talked about in our coaching call last night. So if I could just give you this part here, and I want to zoom this in a little bit right here. So one of the things we talked about, which was here, how the wrong share size turned $2,000 into $35,000. Now, what that meant from yesterday's coaching call was somebody was trading the volatility that we had in the market yesterday, but they were trading too big and getting shaken out of good ideas. Now, raise your hand. I'm definitely raising my hand. Have there been some opportunities where you've been in good trades, you nailed the pick, you nailed the spot, you got the entry, starts moving in your favor, wiggles around a little bit, you get stopped out because you're booking a small profit because you're afraid of the profit disappearing, and then that thing rockets and does exactly what you thought it should do? I'm raising my hand. We've all done that, right? The way to get around that, or I should say the way to fix that problem, is to make sure that you have a share size that allows the stock to breathe a little bit before it does what it's going to do. And that's trade management. That's stuff you need to determine before the trade. So I just want to give you a little bit of a experienced trader insight and something that we see in our community all the time. Once you understand how to look at order flow and tape read, which is what we just kind of explained there in a couple of seconds. Once you understand order flow and tape reading, then the last part is actually understanding how to trade. There's a big difference between understanding what to look at on the charts and how to make money. And I think a lot of people are really finding that out now, especially as 2022 has become a little bit more challenging, for lack of a better way of putting it. If you're not short selling, especially, you really have to fine tune your entries to find some ideas. So anyway, the point that I want to make is if you are struggling right now on your winning trades by cutting your profits too short, that probably means you have too much share size and you're not allowing the stock to push up and pause, push up and pause. The first sign you see a little bit of weakness, you're getting out and you're scared. So lower that share size and look for that bigger move to allow the stock to play itself out, especially on bullish ideas in a bearish market. Okay, so again, if everything's going up and you have that trade on the long side, you bought that stock, you can definitely feel a little more comfortable. But if it's going down in the big picture and stocks are going up in the short term, like we had in energy last week, that's when you got to book those profits a little bit quicker. Okay. What I want to do now is I want to work our way over into some news and some sector rotation. We're actually going to come back to this part right here. Really, really important point that I want to bring up from last night's call. So obviously the Fed minutes there, right? This is a big part of today. Obviously the Fed minutes are coming out a little bit this afternoon. if you have not traded the Fed minutes, the Fed minutes are essentially, again, we're talking about the day trading side of things. The Fed minutes are essentially them giving more detail to what they talked about at the last Fed meeting. So we already know what they did. They raised by 75 basis points, and it was not perceived very well as the market. They overreacted, or they reacted to inflation, which was the number that came out prior to the last Fed meeting. So what we are going to hear today, when this comes out, especially if you're day trading, or if you're not, and you say, oh my gosh, what happened at 2 o'clock in the afternoon? That is the market reacting to the language that they use when we get the transcripts and the details of what happened on the Fed meeting last time. So they're going to basically talk about how aggressively they're going to raise at the next meeting. So when you factor the next meeting in, and you factor the GDP numbers that are coming out on July 13th, this month is lining up to be pretty amazing from a day trading perspective and a swing trading perspective again. But you need to make sure we go back and talk about what we did before about your share size and order flow. Order flow is probably the most important thing. Looking for an entry does not matter if you don't have a great idea. So make order flow the number one priority when you're looking at ideas. Is it obvious, and how do I know if it changed? So the Fed minutes today, first and foremost, a really, really big deal. Now, oil prices, now this is kind of funny. Oil prices bounce back from tumble as supply concerns return. Okay, so supply concerns, oil prices took a really big hit. We just talked about that over here, right, from yesterday. So what does that mean for trading some of these oil stocks, and how do we put these stocks into today's idea? Well, CVX, and I've mentioned this quite a bit, CVX is actually one of the top stocks that I have actually been trading. AMD, CVX, and XPEV have been three of the most profitable stocks that I've been trading probably the last 6 weeks, just to give a little bit of insight into the stocks that I've been involved with recently. CVX and the market, the oil market, the crude oil market, with the amount that it's come down and finding support at $100, I still like it on the short side, but for the next day or two, I think buyers are going to step back in with the headlines that we saw yesterday. So that means that I'm not looking for crude oil to go down again. I'm not looking for energy stocks to go down, despite the fact that they have a bigger picture selling pressure. So right around $100 in the energy sector. So you can see here on the chart of Chevron, the breakout level where it took off last time was right around this 140 level. And we found buyers again right around 140. And traders mostly know that as a double bottom. So when we take a look at the energy sector, you can see it's all the way down here on the bottom. So I'm not looking for it to follow through. I think that it needs to pause again before we short sell. One thing I want to talk about here in this basic materials sector, I think we all can understand that when we're looking at stocks, we're looking at order flow to be obvious, and we're looking for momentum for it to move in that direction. But a big part of understanding when it's obvious, but you should not get involved, is when you start to add volume to the equation. Because remember, volume is the money being spent to create those charts. So it has to be a part of what we look at. So there's a really interesting chart that I want you to take a snapshot of a stock and the sector that is the weakest here when we look at, which is basic materials. It's super obvious, but I'm not looking to be involved in it today. And a matter of fact, I think it's going to reverse and go in the other direction. So we're kind of putting it on video right now that we're looking for this stock. Even though it's strictly to the downside, we're looking for it to have a short-term rally. So if we take a look at the stock right now on the daily chart, and specifically I'm talking about FCX, which again, if we go over to the sector rotation, you can see it's at the bottom of the list, right? Looks pretty obvious, right? A push down and a pause, a push down and a pause, a push down and a pause, a push down and a pause. You can see it's actually down a little bit, right? I'm not looking for it to go down today. As a matter of fact, I'm looking for FCX to reverse today, and I want to give you the clue. So this is just price action. When we add volume into this equation, you start to see volume spikes here on the way down, which is implying that the stock is starting to bottom out and the selling pressure is working its way out. Look at that volume right there. The only way that these charts are created is by the smart money, the deep pockets, creating that supply and demand. So when a stock is going down like that, there's supply. Somebody's dumping shares, dumping shares, dumping shares until they reach the point where that order is done. And then they negotiate a price and they say, look, I have, let's use Tom Lou as an example. Let's say Tom Lou has a hedge fund and he's got like 1 million shares left, just to use an example. Let's say he calls up Franz He says, hey, Franz, I have 1 million shares left of FCX. Do you like it down at these levels? And he says, sure. He goes, okay, great. I have to get rid of this last piece because as soon as I'm done, I'm the selling pressure. It's probably going to start heading in the opposite direction. I'd like to get as much of this off of my plate as possible. So when you take a look at that chart and you take a look at the volume, that's actually what's happening here. So if we go into the intraday chart, you can see that at the end of the day, look at the volume at the beginning of the day, but look at the volume at the end of the day. We had almost 1 million shares trade at the end of the day in FCX. So now you have two choices in your trading game plan. Do I wait for the next short sale? So I'm looking for it to pause before I wait for it to go down again, even though it's really obvious. Or do I take an aggressive trade, which is learning to read the tape on a short-term basis as a day trade and look to be a buyer of that stock? So I'm going to tell you what I'm looking to do today. I think FCX has bottomed out here, but that doesn't mean I'm just going to jump in when the market opens. What I'm going to be looking to do when the market opens is use what we call the minimum viable day trade. The minimum viable day trade is 3 different criteria that we use that tells us today, right now, there is order flow in that stock. In this case, we're looking for bullish order flow. So remember, there's a difference between is it obvious and is it still valid? If my game plan and my tape reading, looking at this stock, again, on the daily charts, determines that this is a bottom and what we call exhaustion, then I'm going to be looking for intraday price action and volume. And we got 3 different ways of doing that in the community, looking for that to bottom out. And I'm going to start to look for it to trade in the other direction. Now, here's the big thing. If that's my game plan and it starts to unfold, I'm going to trade it with conviction, which is actually going to bring me up to my next point. If it does not unfold according to my minimum viable day trade, based on my argument that the stock has bottomed out, then I just leave it alone. What I just told you is probably one of the biggest mistakes that traders make is if I have a game plan and it does not unfold the way I want, losing, struggling traders who are really finding it hard to get profitable trade even though what they wanted to see happen does not happen. It's a common mistake where you go into the day, say, I did all this work, I'm game planning, I think the stock's going to be a great idea, and then you trade it no matter what, as opposed to not getting validation. So remember what I said. Is it obvious? Is it still valid? That second part is the part that a lot of people miss. So I'm just telling you straight up right now, I am looking for bullish validation in FCX today to be a buyer. If I get it, I'm going to get in there. If I don't get it, I'm going to leave it alone and I'm going to work on my way over into some other stocks. Same thing happened in a couple of big tech stocks yesterday, such as AMD. AMD, actually, if you remember last week, we talked about still look valid, but not a swing trade. And you can see buyers actually step back up in a big way. Okay. So what I want to work our way over now is into healthcare. Healthcare is actually the #1 group right now. And we're going to start to take a look at some of those stocks. And you can see we actually have them broken down. If you have not participated in NVAX, oh my gosh, NVAX the last 2 weeks has offered some amazing opportunity. Now, you need to know the price history. You need to know how the stock normally trades. Typically, the stock gives you 2 or 3 days of really explosive price action, and then it pauses. So the stock has a little bit of a different tone to it right now where it's already gone those big 2 days. So you can see here, 2 big days and a pause, 2 big days. So we're going to be looking for this kind of pause for the next move. So if we game plan NVAX stock for today, it's already gone 2 of the days that it normally moves. Now, again, what it normally moves, we're not guessing. We're just saying, what does NVAX normally do? So I'd be looking to day trade NVAX today, but not look for it as a swing trade until the next pause. But what I want to do is give you a bunch of ideas in the healthcare sector right now, because that's been one of the stronger sectors over the last 2, maybe 3 weeks. So we got a bunch of people in here, including Tom, talking about healthcare and also T Brown. Hey, T, how's it going? mRNA up on 4. Okay, thank you for that. Really appreciate that. Timo, good morning. Thanks so much for being here with us. I really appreciate it. So anyway, we're going to run through a list of healthcare stocks. So obviously, NVAX is one of the ones at the top of the list. I want to work through DOCS. And again, you can see how we're working the charts here. Really good, clean move to the upside. You got a higher low here. So you got 1, 2, 3, 4 higher lows. You got 1, 2, 3, new levels. Yesterday is what we would call the optimal entry. So optimal entry is after a stock pauses or pulls back. As soon as it starts to move in that direction, that's as close as you are to the optimal entry. So yesterday was the optimal entry in DOCS. We're looking for additional follow through. So let's keep going through the list, right? So DOCS is one. We just talked about MRNA. Okay, again, you can actually see it was up 3.7% yesterday. Finally got through the breakout level. We've also been watching Merck, Johnson & Johnson, which actually had a really clean reversal yesterday back to the upside, and Eli Lilly. So you can see that the tech stocks, the healthcare stocks have actually caught a really, really clean bid. So if you remember last week as well, which is one of the reasons I really hope that you're a regular viewer of our channel, is we've been talking about some of the stocks that got upgrades. And there were two stocks last week that got really important upgrades. One of them was Chewy and one of them was Snow. So John, thank you for posting in Chewy there. So we're going to take a look at first Snow. And you can see Snow over here got an upgrade for JP Morgan, took a break, and then actually had a pretty nice rally for the next 2 days. So now what's going on with this stock? Well, it's right at a big level. And this is actually the challenge that we're seeing in a lot of stocks right now, where they're sitting right at a level that in a bear market breakout, you really need for it to close above that level. So again, I want to give you some insights into how I'm looking to trade the breakouts in these stronger stocks right now that have longer term moves to the downside. If the bigger obvious move is to the downside, but you're breaking out to the upside. In this particular case, I want to see the stock close outside of that level, not just trade to that level. A very, very big difference, because when you have order flow on your side, it's easier to get involved sooner. And it's one of the top questions we get. In this case, we have a push to the downside, sideways, and a potential breakout. So I really want you to be disciplined in your game planning and know the difference between everything is obvious and I'm hopping on board versus it's a reversal and I have to wait for confirmation. I have to wait for validation, which in this case, in Snow, it's right on that breakout level and we're waiting for it to close outside of this level, which looks like it's above 155. Chewy is another one that had an upgrade from JP Morgan. So both of these actually had upgrades from JP Morgan. The JP Morgan upgrade was right over here. And if we drop in the 50-period moving average, you can see it held it perfectly. So what I'd really like for you to see here, again, this is one of the questions that we had on our coaching call last night, is when do I buy a swing trade? When is the best time for me to keep risk manageable but have the greatest reward potential? Again, if you're a regular viewer of our channel, you know we're very, very big on teaching the push and the pause. The pause is when we manage risk. The push is when we make money and determine our optimal entry. So really, really good trading examples here in Chewy. This is when we got the upgrade from JP Morgan, and we had 4 really solid days of buying. Then we had the push, and then we had the optimal entry, and we had 2 days of buying. So what's super interesting about this is a question that we get all the time is, how do I know which upgrades I should pay attention to? And it really comes down to, have you heard of the company that did the upgrade? Obviously, JP Morgan giving an upgrade to Chewy and Snow. That's obviously one of the bigger companies out there, and you got follow through. So CHWY and also SNOW would be in my watch list again for this entire week. Okay. I want to run through some more ideas that are in the game plan for today. Obviously, taking a look at sector rotation. We just talked about basic materials and FCX. We just talked about healthcare. I want to talk about one of the bigger stocks in consumer defensive that I've been watching, and it's resting right on a breakout. So again, this is a potential reverse to the upside. It's a stock that you love. It's a stock that I know. We all shop at this place, Costco. Costco is resting right at the breakout level, and we're looking to see, can it finally get through this breakout here? It's filled the gap, stopped, hit resistance, and right there again, we had a nice reversal to the upside. So now it's closing above the 50, but right at that breakout level. So the first thing we want to do is we want to assess a target if Costco can finally punch through there. And essentially what we're going to be looking for is the minimum target is going to be up near the 510 level, which is about another $25 higher from where we are right now. So again, I want to see Costco break out of this level. It's already closed above the 50-period moving average, and 525 is going to be the first profit target that I'm going to be looking for in Costco. Working our way across the board into some other news. Obviously, we've talked about the Fed minutes. We also have jobs data coming out today. So we're not lacking news coming out today. We also want to talk about treasury yields, right? Treasury yields have changed a little bit. Obviously, that was the quote unquote reason for tech stocks catching a short-term bid yesterday. And you can see that technology out of everything actually was pretty darn strong yesterday. So there was a bunch of tech stocks that also caught a bid yesterday as well. So what I want to do now, I want to give you a chance to take a look at some of the ideas that are in my game plan for the day, and maybe you might find them matching your criteria, maybe not. Either way, I want to give you the thought process behind it. So obviously everything starts out with the market, then we go up to the sectors, and then we go to individual groups. Interestingly, one of the stock groups that was one of the strongest probably for about 2 weeks, maybe even 3 weeks, solar stocks have kind of cooled off a little bit, no pun intended. So they're kind of pushed their way out of my list right now. And we're working our way over to see if tech stocks, which by a mile were the strongest group yesterday in the sector rotation that our community was watching, we're looking to see, can we get consecutive days of well bid in the market on the tech side? If we can, it could be pretty interesting. It was only one day. Remember, we said order flow. How long has it been obvious? It was only one day in the tech stock yesterday. If we can get one more day, my gosh, I'd really be excited about that, because those stocks are pretty easy to trade when they're in play. Okay, so I'm going to hop on over and we're going to break this down a little bit more here and point out some ideas that I happen to be looking at for today. Here's the one thing I want to talk about here, which is this. We had a question yesterday on our coaching call where somebody said, how do I have the confidence to commit to a trade? How do I have the confidence to stop hesitating and just put that trade on? How do I know that trade is going to follow through? Now, out of everything that we talked about here today, this is by far the most important thing, by a mile. I just want to say that, by a mile. This will help you and turn your trading around in a heartbeat and make you have a lot less stress, because you're going to realize you're focusing on the wrong thing. When you get into a trade, or you're thinking about putting on a trade and you hesitate, if you hesitate when you put that on, you think it's because you're not sure if that trade is going to follow through. You're afraid that that trade might lose money. That's the wrong focus. And I can't say this any other way, and I hope this catapults you to levels that you'd never thought were possible. What you should have confidence in is not that trade. What you should have confidence in, so that you never hesitate, is your trading edge over all of the trades that you're going to make. So think about this. If we put on a trade, or we're thinking about putting on a trade, we're putting on that trade because we believe we've built a trading edge and a strategy that works most of the time. Most of the time, over a large sample of size, it's going to follow through, which also means sometimes it's not going to, and we accept that as a part of the trade, right? So if we look at our next trade and we stop thinking about that one trade and shift the focus to, if I place this trade, it's one of the bunch of trades I'm going to place that makes my edge work. When you shift your focus to say, I believe in my edge versus I believe in this trade, everything changes. You will never hesitate again. You will trade flawlessly, trust me, and trading will be a lot easier, because now you're never going to second guess. Will this trade work? Will this trade work? Will this trade work? We have no idea which trade from our edge will work. But if we have a track record and we've proven it works, we have a very strong commitment to the fact that it will work over time. And when I say work, meaning that it will follow through in the direction that you thought. If you are a new trader, or quite frankly, an experienced trader who has experienced if you're an experienced trader who hesitates, even after having that experience, all that hard work you put in, and you still hesitate, you're focusing on the wrong part to be committed to. Shift it. You're not committed to the trade. You're committed to your edge. And if you believe in your edge because you have a track record, see the trade, take the trade. See the trade, take the trade. Promise me you'll come back with the comment that said, I shifted the way I think and it made everything so much easier and I don't hesitate anymore. It's that important. All right. I want to give you some other ideas from today just to wrap this stuff up here. Obviously, the market itself, pretty darn interesting that we've had 3 green days in a row. The sellers are the short sellers panicking yet? Probably not. You can see we're actually down a little bit more. But a couple of ideas that I want to talk about today, something that I haven't talked about in a while, which is McDonald's. And you can see McDonald's, this level has been pretty big. Trade a little bit, closed a little bit negative, but I'm watching for McDonald's to get above 255. So that's an alert that I'm setting in McDonald's. Over 255, I'm looking to put a new position on in McDonald's. Something on the bearish side of things, the other side of the market, NEM. NEM did not bounce with the market yesterday. You can see that it's got some room to go down, probably into the low 50s. So I'm actually looking for this one to actually head back to the downside. Now, I want to give you a little bit of a advanced trade today. Raise your hand if you think that the housing market is not in good shape. I don't. Every place you look, there's prices starting to come down, inventory starting to go up. So one of the ideas that I'm looking at today, actually two stocks, are stocks that have a bearish big picture story, the housing market, recently have rallied against a bigger picture move to the downside. I am looking for these stocks to go down over the next 2 days, maybe even the next 3 days. And you'll see what I mean here, which is I'm looking at Lennar, which you can see here, the big picture is to the downside, but they've rallied the last couple of days. And I'm looking for Pulte Homes. I'm looking for both of those to head to the downside today. The other stock that is pretty interesting today is MNST. MNST actually showing some really solid relative strength and broke out over the last couple of days. You can see actually we had this really clean entry here where we consolidated for 2 days and then we broke out. So obviously the optimal entry in MST was 2 days ago, and we're coming up to a little bit of resistance here, right up in that $98 level. So now you have a choice for MNST. It's a stock that meets the criteria, but it already rallied 2 days already, and it has resistance $2 ahead. So MNST right now is a trade where I'd be working my position where I would not go in full share size. I'd be looking to put on the first piece of my entry in MNST, and I wouldn't be looking to put on the second piece until if it gets above 98, and probably have to close there for me to do that. So again, these are the trade management things of working the position that will make a monster difference in your long-term results, because you're not trying to be right on the first entry. It's more important to be in the right stocks and work that order than it is to put a position on and then hope it moves in your favor. It's a lot easier when it's already going in that direction. The only other part you need to learn is how to work that position. So we talked about a bunch of stuff today. We talked about whether or not the interest rate treasury yield curve is going to affect tech stocks. Tech stocks, I'm looking to see at least 1 or 2 more days of buying. If we get it, great. I'm going to get in there. If we don't, I'm going to leave them alone. Energy stocks pulled back hard yesterday. Oil was down 8% plus, more than 8% at one point yesterday. But energy stocks have kind of pulled into a support level. So that's more of a short-term trade for me right now. Healthcare stocks are still looking strong to me. They've been kind of on fire, quite honestly, for the last 3 weeks. And consumer staples, looking for Costco to have a bounce out of that level. I just want to finish up on this comment here. Lost my confidence and blew up my count on my own stupidity. Today I'm starting over from 1,000 versus the 5,000 I had. It took a week off to regroup. Okay, so AC, I'm going to give you a little bit of experience, okay? First of all, the fact that you are here with us at 7:30 in the morning, continuing to try and become a better trader, awesome, absolutely awesome, because what that shows me, and we've never met before, that shows me that you're not going to let anything get you down, and that is so important to anything you want to do in life, but especially in the markets. But here's the big thing, and this is the big thing that I talk about on our coaching calls. It is critical. First of all, it's a good thing that you took the time off. The second part, though, is critical that you ask yourself, what happened? What actions did you take that caused you to lose that money? And how could you learn from that immediately? So I just want to give you an example. So if your account went from 5,000 down to 1,000, and let's just say it happened in June. And this is something that I used in my own trading. And I started doing this in July of 2011. I know exactly when it happened because it was my biggest losing month ever. It was during the Greek debt crisis and stuff was happening all the time. So let's say you lost $4,000 in June. Here's what you need to do. You need to reframe what that money you lost and say, man, I went to this seminar on trading in June of 2022. It cost me $4,000. It was almost all the money I had, but oh my gosh, it was worth it because I learned this, because I learned this, because I learned this, because I learned this, and because I learned this. And because I spent $4,000 on those lessons, I'm a much better trader for it today, and I don't make those mistakes anymore. As a matter of fact, I took all those lessons, and now I'm a consistently profitable trader. That's what you need to say about that big loss in in June. You went to a $4,000 seminar in June, trading seminar in June of 2022. And it was the best seminar you ever went to because nothing taught you lessons like that $4,000 seminar. That's how you improve as a trader. And by the way, for everybody else on this call, you should be doing that with every single trade that you make. Every single trade should be feedback for you to make a better decision on your next trade. I'm going to end it on that. Thank you so much for joining me here today, everybody. I really, really appreciate you being here. If you got some value out of today, if you got some stock picks that you like, do me a favor, subscribe, hit that like button, and leave a comment below the video. I promise to get back to you as soon as I can. Thank you so much today, everybody. Have an awesome day.